If you've been a bond investor for the last few years, you've undoubtedly seen the price of your bond holdings decline as interest rates have risen. If you recall, back in 2020, interest rates were around zero, with the 10-year getting all the way down to around 0.5%. And since that time, as inflation took hold in later years, we saw interest rates rise to where they are today, which is short-term rates of upwards of 5.5%, with the longer-term rates around 5%. And with all bonds, as interest rates go up, prices come down. So for a lot of investors that are feeling somewhat defeated and ready to abandon bonds, I wanted to put up this chart to show what has happened historically after these significant declines. So what we're seeing today is a notable decline. In fact, it is the second largest price decline that we've ever seen in US bond history, going back to 1926. The only greater time period of bigger bond losses was in the early 1980s. But looking back at times we've had very significant bond losses, I want to look at what happened in the 3 years following those time periods. So in the 70s, when we saw bond prices drop by 12.7%, in the 3 years following that decline, prices on bonds appreciated by 10.5%. In the 80s, after prices declined by over 26%, we saw over the next 3 years, prices on bonds appreciated by 19.2%. So while certainly I do not know what happens over the next 3 years from here, history tells us that we do not stay at these depressed levels for very long. With bonds, what we tend to see is that today's higher interest rates are followed by a dropping of interest rates, which makes your prices on bonds go back up. For this reason, this is why we have not loaded up exclusively on short-term money markets or low-duration bond investments, because if interest rates do start to decline, shorter investments will not get the benefit of the declining interest rates and the rising prices. If you've been a bond investor for the last 3 years, certainly you got in when interest rates are at zero. You've ridden out some very, very rough times in the bond market, and things are certainly in a spot where now interest rates are higher, your income is going to be higher, and you're in a much better position to experience price appreciation going forward. So again, I wanted to put this out there to show you that there is light at the end of the tunnel, and historically, the bonds that you've seen go down in value the last couple of years are now in a position to experience some appreciation going forward. Again, if you have questions about this or anything else, just let us know.